Welcome to FT Academy. Welcome to FT Academy. Our first class today will be dealing on our basic indicator, our first indicator based on technical analysis under type of analysis. So based on technical analysis, we'll be dealing with moving average. Moving average. Moving average. A moving average is a foreign exchange indicator that is commonly used in a technical analysis. So it's commonly used by many people, many traders in this forex market. So what is this common tool that everybody wants to know, that everybody has tried? A moving average is simply a calculation, like in our secondary school, a calculation on our average, where you add up a number, a series of number, and divide them by their total numbers. Now, moving average is a calculation that takes the arithmetic mean of a given set of prices over a specific period of time. Most moving average, most moving average are based on the closing price. For example, a four hours chart, a 4 hours moving average on a 4 hour chart is the sum of the closing prices divided by 4, like our normal average calculation in secondary school. But you don't really need to know all these facts. You just need to know how to use it, how to be profitable from it, and that's what we're going to show you. But firstly, as the name implies, a moving average is an average that keeps moving. It's a what? A moving average. Old data is dropped as new data is formed. So creates it creates new averages by the minute, by the seconds. So there are two types of moving average. There is EMA and there's SMA, exponential moving average and simple moving average. Now, which are we going to be using? We'll be using EMA, exponential moving average. Why? Because simple moving average tends to lag. Why? Because it is sensitive. Simple moving average calculates the average price data. While exponential moving average give more weight to the currency data, that to the current currency data. Is giving EM is giving to what is happening now, putting more weight. While SMA, that simple moving average, is calculating all the average and giving you based on calculation that this is what's happening. EMA by every glitch is telling you what's happening, so it's more reliable than SMA. So now let me show you what we are talking about. Now, what are moving average? Moving average, you see this red line here, this is a moving average, and this blue line, this is a moving average. Now, how can we use this moving average? That's what you should be asking. Now, two things you need to know is a moving average helps indicate trends, helps identify entry point in a trade and exit point in a trade. Entry point and exit point in a trade. And lastly, moving average acts as support, which we use as confluence to enter a trade. Now, when you see moving average, there might be fake outs, but as you continue to watch this video, you understand what are fake outs. Now, this is a what? This is a moving average. The red line and the blue line, they are both moving averages. So now, for you to identify trend, we'll start by identifying trends using moving average. This blue line will be over the red line. What does that mean? The blue line will be on top, while the red line will be below. On a what? On a bullish trend. Please pick up your pen and write down. In a bullish trend, the blue line is above and the red line is below. The blue line is above and the red line is below. And in a bearish trend, its opposite is what is the opposite. Now look closely. In a bearish trend, the red line is on top, while the what blue line is below. The red line is on top, the blue line is below. I'll give you a few seconds to get those points down as we continue on our moving average indicator. Moving average. Now, moving average is something you need to know about moving average. Entering point and exit point. We are now in entering point and exit point. Now, moving average has golden cross. The golden cross is where the fast moving average crosses below the slow moving average. This point of cross, this point here, this point of cross is called the golden cross. It's called a golden cross. The cross between the fast moving average and the slow moving average is called a golden cross. Now let me explain. Now I will show you series of golden cross and how it affected trends. Okay, let's zoom in. Now you see this exact point that moving average crossed each other. This is a golden cross. And after this cross, what happens? The fast moving average, which is this blue, crosses the red towards the upside direction. It crosses it to the upside direction. You see, it did not cross it down. It crosses what? Up. It crosses it to the upside direction, which is known in forex trade as indicating an uptrend. It indicates what? An uptrend. So let's zoom out and see how the market is after this cross. What happened? You see, after this cross here, market went up all the way here, and you see there's another cross here to indicate the exit point for you to know the trend has changed. And you see, by our definition of identifying trend, you see when price crosses, it changes position from being above and being below. In a bearish, the red was above and the blue was below. As it crosses, the blue became above and the red below, which indicates an uptrend is about to start. You buy. You bought at this point and you took your profits at the next moving average golden cross. That's how they trade golden cross and moving average. But at this point and your profit was here. Now let's calculate how much you would have made in a simple market. In a simple market, you bought here 99984. Yeah, this is about 9. Let's say you bought here, you won't buy a middle class cross 6056. That's all about 1000 pips. 1000 pips. 0.1 times 1000 pips, you would have made $100. A simple way to make $100. You see, there are many ways to get these pips and many ways to get this money. Many indicators are working. If I had entered this trade here using moving average as my indicator and exited at the next golden cross, could have made what? $100 with a normal standard lot size. So now let's go on. Let's search for other golden crosses. Golden cross. I think there's a golden cross here. Golden cross. Now you got here and you saw a golden cross. And you what? And you sold. You see this golden cross is different from the one we saw just now. This one indicates a what? This one indicates a downtrend. Downtrend. Price, this moving average went down and it's not below the red. It went down, it's not below the red. It broke down, it's not below the red. It's below what? The red. That means what? It's a downtrend. So imagine you bought, you sold here. You know, in a downtrend you sell. So now we sell here, and the next moving average over here. I can't see it. Let's zoom in a little bit. Let's zoom in a little bit. Okay, perfect. Now you sold here. You sold here, and you took a profit here. Sorry, here. So there, took a profit here. Please let's kindly measure our profit. Let's measure our profit. Yeah, profit from here. 755. 755 to, wow, this is more than, this is up to 1,000 pips. This is either 900 or 1,000 pips. You would have made $100 from what? From just using simple, very simple. You see how to make money is very simple on Forex. It's hard though when you are getting to the complicated side. This is the easy part. But you see, some people are using just this easy part. Now, one thing about Forex trading, don't force yourself into it. It's an indicator that works for you, that you like, that you are comfortable using. That's what you use. Now, after using, now we know where to enter using a moving average and exit using a moving average. Entry point and exit point is not checked off our list. How to identify a trend is not checked off our list. Now, what do moving average act? What can they tell us again? What do they do? How do they help our trading experience? Now, moving averages tend to act as support. Tend to act as support. As long the support is holding, you are still good in that trade. Still stay. Immediately the support breaks. Immediately the support breaks. Just kindly close your trade. Kindly close your trade when the support breaks. Now let's see what we're talking about. Let's see. Now it acts as support. It acts like a guideline. Now you being on a staircase. Staircase are like this, like this, like this, like this, like this. Now somebody is climbing on the staircase. The staircase is climbing to the top. There's always a ray here from him to hold, another ray by his side for him to hold, acting as a guideline for him not to fall. So if even though he's going to fall, it will fall on this ray and bounce back. It will fall on this ray. The nigga fell on this ray, bounce back, fell on this other ray, bounce back, fell on this other ray, fell on this other ray, bounce back. So the ray are acting as support to him. He is not breaking through. The moment it breaks through those rays, is another ball game entirely. That's how moving average acts as. Now let me indicate. You see in this uptrend, price did not break this, and price break this. Did not break this. Sorry, price did not break both moving average here. Sometimes price breaks one and leaves the other one and bounce back again above the other one. It's acting like a support. So this is how I trade now. I told you. Let me show you. I see a moving average here. Moving average crossover. I'll tell you a secret about moving averages. They've helped me a lot. I see a cross here, and I bought here. But let's zoom in. I think this is a very good buy. I bought here. Where did I buy? I buy here. No, it's too close. I bought here, and my moving average acted as support. Price did not close and begin below them. It acted as support all the way to this top and close there, all the way to that top. And I'm not sure it closed there. If you want to calculate the pips, nigga, you won't be able to phantom the money you would have made from just understanding moving averages. 61262. This thing will get to say 65. 5,000 pips. If you traded it to the standard lot size, you made $500. That's what? $500 what? That's that's simply about $100 for something. 200 is something. 300. You would have made much. You would have made much. Like seriously, you would have made much. Okay, look at the next. Look at the next thing here. This is where you would have gotten out. When the price broke cross again, another golden cross, you would have taken your profit and get out. That's how price lasted. Now you can see in this trade that a bearish trend started. Price started falling down. Look at the golden cross here, golden cross, golden cross here, and you sold here. Even though price broke this, you see price have not broken the red moving average. That red moving average is still acting as support, bouncing price back to the blue one. If the blue moving average can hold it, bounce it back, then your bearish trend is continuing. You can see it's acting as support. It has not broken it yet. That's how moving average acts as support, identify trends, shows entering point and exit point, safe entering point and exit point. Now, the last thing I'm going to tell you about moving averages are moving average tends to advise you when to enter the market and when not to enter the market using the same support theory. When moving averages are inside a price, how will I say? Now, look at this, please. This is a clear example. A clear example. This is a clear example. You see, moving average is inside a candlestick. It's inside. It normally is outside, acting as support and resistance. The moment it's inside, don't trade the market. The market is what? Is ranging. It's ranging. The market is simply just ranging. It's just ranging. It's not doing anything. It's waiting for a big move breakout. A big breakout. Big, very big breakout. And see, it ranges for what? How many hours? It range. After ranging, you saw the big move. Shoot. Strong bullish candle to the top. Strong. Why? Market was ranging. So if you have the knowledge that when market is ranging, when moving average is inside price, don't trade it. Watch for the next golden cross. You see, when it's inside, price did not cross at any point. Let me zoom in for you to see. It did not cross at any point. So you just be waiting for the next cross because you know price is ranging. Now see the strong cross here, and you bought here and you sold and you took your profit. As a scalper, you would have made much if you take the profit here. Like these are about 500 pips. 500 pips, you would have made $50. You use for a scalper to make you making $50 as a beginner. That's about 20,000. You made that as a beginner. Let greed not take over you. Chill, be calm. Don't take a trade again that day. You set a daily limit that you know you can be. If it's $20, if you make above in a single trade, leave it like that. Don't trade again. Don't become over too confident and take another trade. Now let's look for another place when price was inside. Price was inside for a while. Okay. Look at here. Price was confluencing. Price was inside. Access as support came inside. Look at this point. Look at this point here. Look at this point here. Look at this point here. Price is inside. Telling you, just wait for the move. Wait for the move. Me, I'll be waiting for the crush. I saw a crush here. I took the opportunity. I sold here. Remember, we sold here. I saw a crush here. Now, let's move. I saw a crush here. I sold here. I took my profit here. How many pips is that? Let's calculate. Let's see how much we'll be making. We just use moving average. 609. 609 below the cost 532. It is as about 400 pips. That's about $40, which is standard. I'm using a standard lot size because I won't be using a big lot size for your, as I know many of your accounts are not up to that. So we're using 0.1 lot size, 0.1. So anything I'm calculating for you, I'm using 0.1 to calculate it. Now with those pips using moving average, you would know that you could identify what? You could identify trends, 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 trends. What are trends? Overall direction a price is moving, either bullish, bearish, or sideways. Identify trend, entry, entry, exit point, acts as support and resistance. Three things price moving average does for us, and it indicates a ranging market. Ranging market. How does it indicate? Moving average will be inside the price itself. The inside the price itself, it will no longer be acting as support and resistance. Support and resistance. Now, last thing I'm going to do now is show you how. Now, the whole thing is the moving average already set for me? No, it's not set for you. You set it by yourself. Now, me myself as a trader, when I've been in this market for a while, I use closed moving average. Closed moving average. It calculates what? The average mean of all the prices. So I like it calculating the most recent prices and reflect them for me. So my moving average are small. I'll show you how to access your moving average. You see this F, touch this F. What's next? Is there you go. Here's your moving average. Moving average. Moving average. What do? You clear this. Your moving average should be what? 8. 8 should be blue. You see? Exponential and simple. That's EMA and SMA by using exponential moving. You see my setting? 8 exponential. Close. 1 pixel. Blue. Now this done. You come again, go to the same place. Now your 8 now will be 14. 14. Your year will be red, and the my moving average accumulates. I added today. Added to it. Added. So it's kindly delete. Let's delete. Okay. Let's delete. Now see, that's how you set your moving average. Let's clear and do it again. Let's clear and do it again from the start. See, moving average here, moving average here. Touch my moving average. 8, exponential. I'm done with it. I go back again. I click on this. Get to moving average. I put 14. What do we do again? Red. And my moving average here. I'm ready to trade with my moving average. Now you see, I'm expecting now this market. I can trade this market. If my moving average does not get broken by these prices and it actually goes below it, I'll take it. If the next candle closes below this candle here, I'll sell. Why will I sell? Because the moving average has not been broken, and I'm selling, and I'll get profit out of it. average class. For many of you that don't believe in moving average, I'm a fan of moving average. I'm a big fan. I'm a very big fan of moving averages. I use them every time in my trading, and I think it will work for you if you believe. But not all indicators work for all traders. So I'll be teaching you all the indicators that you can use for your trading. So you pick the one you know best or the one you like, the one you prefer. So have a great day and be well. Thank you for staying for FT Academy classes. We'll be continuing this class soon.